Hello and welcome back. You might have heard me multiple times saying that this industry will grow, industry will grow, wealth tech will grow very big, Robo Advisory will do wonders. Now, in this section, let us find out why I was saying that it will grow and what are the driving factors. So, let us look at and let us get convinced that this is an industry which has a great future. If you are insurance, if you are in insurance industry, if you are in a personal finance, if you're an advisor, or if you're a student, or if you're a trainer, or if you're a personal finance manager. So these things will help you to grow in your career and also to understand that what is this new industry, or what are the new technologies which is I would say disrupting this industry. So let us find out what are those driving factors. So PSD2 and open banking, as we have already discussed, that PSD2 and open banking will play a very much important role into wealth management, because what open banking facilitates is the secure and consent based transfer of data to different companies which are authorized to get your information, right? So as we discussed that we have already developed a course on PSD2 and open banking and GDPR. So we cannot go in detail here because that itself is a very big industry or a very big concept. But just to give you an overview so that you can easily visualize and imagine what is open banking. So in open banking, there are regulated and licensed entities which can share your information with other entities only on the basis of your explicit consent, which means they cannot share, they cannot read any data without your consent. And that is the beauty of open banking. Now just link that with wealth tech, which means say now I have say 5 bank accounts, I have some real estate, I have some other say financial tools. What I can do is that I can share that information with a wealth tech company or a robo advisors through an APIs just by a click of a button. So I click that, okay, just link my XYZ bank account with this wealth tech. I enter all the details, it automatically gets and passes an authorization to the bank XYZ that here is a customer which wants you to share their bank statement and the details in this format with us. And accordingly, once you do that, the wealth tech will be able to analyze that what has been your spending pattern, where should you invest, where can you save money, all other aspects. So hence, using this technology is the new age technology. The regulators are becoming, I would say, more pro towards financial technology or using technology and opening it up for more innovation and competition. So these things, the regulation will drive the change or the growth of this wealth tech. And again, more tech savvy, do it yourself, informed and demanding consumers. Now, because of this technology, everybody almost has a smartphone or internet connectivity. So what they can do is that they can read a lot of news. They know what a different kind of say investment tool. Maybe not in depth, but they already know a lot about different tools, right? So before investing into any of the wealth management or a personal finance tool, they already kind of do a Google and do a lot of research. Okay, what kind of tool it is, so that they do not want to become a fool in front of an advisor or in front of say a wealth tech robo advisor. So those kind of things are happening. People are becoming more informed, and again, a lot of data is available, and computational power has also increased, which means just imagine that I can also attach my Facebook profile with a robo advisor, which can tell you that on the basis of your past check-ins to different hotels and your spending patterns, we can suggest you that you can plan another holiday in say these many months, or you can cut down on your expenses. So those kind of personalization can also happen. Again, thanks to machine learning, artificial intelligence, and other new age technologies which we have discussed in this course. So because of the big data analysis and machine learning, these things are possible. Again, it also offers you a new alternate investment tools, and it also helps you to take a lot of complex investment decisions, which means if you are not, I would say, too much into investments, or if you're not following up how investment or say gold prices, say share market or real estate is kind of doing into the market, what you can do is that these are complex investment decisions, right? Say you just have, say, 20,000 US dollar or say 30,000 US dollar, and you don't know how to invest in, right? Because it is not possible for you to understand everything overnight, right? So hence what you do is that because of this Robotech, or say Robo Advisor, also WealthTech, it will be easier for you to identify that which tool will give you maximum return within your target period. So those kind of things are possible. Again, fear of losing out has pushed agent advisors to use technology and be smarter. As we discussed, your traditional advisor, just imagine there's an advisor which has a new technology, which has a palm tool, which has a laptop, and gives you updated and then amazing, suggestions on investment. As compared to traditional advisor, which just comes with a pen and paper, asks you, okay, what is your age, what do you want, and gives you suggestion on the basis of whatever they have learned over a period of time. So there will be a vast difference, right? Whatever you get from a smart advisor will be updated and on the basis of the prevalent marketing conditions. So those things are possible, and hence the agents or the advisor in the fear of losing out, that I should not lose out to smart advisor or to smart technologies. And what they are doing is that they are now requesting their companies that you should also either invest into these technologies or get us those applications, so which will assist me to suggest a much better financial tool to my customers. And as we have also discussed, that high fear of human advisors and a minimum threshold investment actually is not helping a lot of first-time, I would say, investors or millennials to invest, right? Because again, you have to either say invest a minimum threshold, or again, a human advisor is too costly. So what you do is that you keep on accumulating wealth in, say, a lower give return financial product, which is not helping anyone, right? With these kind of technologies, you can easily do it. And now people are earning money in a non-traditional manner, right? Earlier, people were working in factories, working in offices, and now young generation is earning through, say, YouTube, through, say, all other kind of Instagrams and platforms, right? So even if they get also a Google ad play or say through YouTube's, so whatever they earn, they also have an intention or a will to invest money, right? But they do not earn that much as they get into their salaries, at least to start with. But gradually, the way they grow, they can invest more, right? But they also want to invest when they are younger, right? And these kind of things will help that, I would say, industry or that segment of investors as well. So with these kind of technologies, we are not saying that human advisors will be an extinct and it will not, I would say, exist anymore. It will be a hybrid model, which means, for example, let's say you are investing, say, $2, $3, $4, $5. You do not need an advisor, right? However, the moment you graduate to a certain level, the company will say, okay, this seems that this person has increased their wealth over a period of time, and they have started with $2, and now they are now investing after, say, 15 or 20 years. Now they want to invest around, say, 2 million US dollar, or say 20 thousand US dollar, or something of that sort, right? So those kind of things are possible, and the moment it happens, you will be able to interact with a human, I would say, advisor along with the technology. So it will be a hybrid model. It will not happen that only machines will rule this industry, because again, it's also about human emotions, right? Because investment is a human emotion. For example, your first house is a emotional decision. Your child's education, your child's marriage, those kind of things, or your child's sporting activities or their hobbies, these are emotional decisions, right? So where a machine will not be able to help you much as compared to a human advisors. So again, a hybrid model will work. Then we are talking about changing lifestyle. People want to take investment decisions at any time and not only between 9 a.m. to 6 p.m., right? Because advisors mostly work into that time. If you have a good relation, you can probably call up someone in the 10 at the night, or say maximum 12 at the night, but you cannot call them around 1 a.m. or 2 a.m. or 3 a.m. in the morning, right? However, if you are just, say, scared, or you just, say, had a nightmare that I have not invested into my retirement and I must do something, and suddenly you wake up in 2 a.m. or 3 a.m. in the morning and say, now I have to invest, right? That's where these kind of technologies will help you. Advisors will not be able to help you for that. You will have to wait for the morning or the 9 a.m. to happen, or once the advisor is ready to take your call. So hence, because of these things, we are saying that this industry is bound to grow. So in a nutshell, there are three important drivers. So all the factors that we talked about falls under these three categories. Number one, regulation. So open banking, PSD2, and all other regulators like regulatory sandboxes. So those kind of things are happening, and those kind of the regulators of different countries are adopting technology in finance or digital finance or fintech. And hence the regulation, because unless the regulation is conducive to technology, no technology and no amount of growth will be able to help anyone, right? The regulators need to allow that to happen. So now, if you look at the trend across the globe, regulators are warming up to technology. They understand that the need of the customers are different. The cost of serving a customer has gone up. So those kind of things they are considering, and hence they are designing or they are developing those kind of regulations and policies. Empowerment, which means that now customers are more informed, they are more empowered, and as we discussed in one of the specific examples, that in some part of the world, women are not allowed to go to, say, or to interact with more of the male-dominated, professions, and go ahead and talk to them about their investments. What they can do is that using this technology, they can invest their money on their mobile phones or on their laptop onto a web platform. They do not have to interact with anyone, right? So that means even those women or those kind of segment of society will also get empowered because of technology. Then we are talking about digitalization, as we talked about Facebook, Twitter, Instagram, and all other technologies. So what we are doing is that we are generating a lot of data, right? A lot of digitalization has happened. You do not have to now walk up to a bank branch to open a bank account. You can do that on mobile phone, which means the moment you enter all the information onto your smartphone to open a bank account or to get a credit card or to get a loan or to get or to invest somewhere, those data is getting analyzed, and hence the system is profiling your investment capacity, your saving capacity, your risk taking capacities, and hence because of a lot of digitalization and empowerment and regulation, it is possible, and now it is not going to go down. It will increase in future, and hence we are telling you again and again that this industry will grow very big because everyone wants to manage their finance and everyone wants to optimize their profits or optimize their gains. So that is the human psychology, right? That is the economics rule, right? That the human beings are rational and they want to optimize their gain. And hence, if you follow that thing, these three drivers will increase the growth of wealth tech and robo advisories. So that's all in this section. See you in the next chapter. Till the time, take care and see you there. Thank you.